Hello there and welcome to the Hashpower Academy. This is your place to learn anything to do with Bitcoin. And in the context of today's video, the wider digital asset space, which did suffer a very large crash. In this video, I'll be focused on what losses look like in comparison to how to just get back to where you were in the first place. A bit of subject area across the fact that Bitcoin dropped a small amount in comparison to everything else. Some assets crashing even 99% in a very flash crash sort of event. So there's probably a large entity out there that completely blew up, and time will tell us what that person or entity or thing was. And the other aspects to this are truly the lessons, the 101 that needs to be returned to. And at the end of the video, I'm going to link the video to a channel that I've seen does a lot of trading type stuff. But he has a really good video just taking you through the process of dealing with a significant financial loss from trading. It's really good and it has that focus on physical things because everything at the Hashpower Academy is trying to teach that physical connection to, yes, Bitcoin, but even to the personal self and human psyche after an emotionally volatile sort of situation such as getting liquidated and your account dropping to nothing. That's quite a shock. And if you have that exact experience right now, I recommend that video. So let's dive in. It boils down to this for the example here of Bitcoin only dropped 10%, and confidently it's the day-to-day, week-to-week sort of events of it dropping in price, and it's going to recover. It's going to continue. It's going to maybe go down a bit more and go up, or go up a bit more and go down. That's the market. But what we know over time is that it's going to appreciate in dollar terms. So a 10% spot recovery shouldn't really be a problem to anyone in the Bitcoin space, especially for many years where 30-40% drops is just another Tuesday. But other areas of this would be focused on if a person's trading, trying to create a net profit loss that's positive. And with this sort of perspective of loss, this is the example I want to give. If you lose, let's just use the example of $100, 100%, $100. If you lose 10%, to get back to $100 from 90, you need to make 11%. To lose $20, right? You're down to $80. To get from 80 back to $100, you need to make 25%. Positive. To lose 10, you need to make 11. To lose 20, you have to make a 25% gain. And you can probably guess where I'm going with this. If you lose 30%, you need to make a positive 43% gain. And the slippage just gets wider. Lose 40%, you need to make, is it 66%? And this is the crazy one. If you started with $100, and yes, you can multiply this out to your balance. If you lose half, you're down to 50. How do you get from 50 to 100? You have to make 100%. So the point I'm trying to make here is you don't want to be trading any more than 1 to 2% of your balance. You don't want any loss, and stop losses are very critical in importance for this. You don't want to make a loss that's any more than 1 to 2%, because the recovery gets more extreme versus the loss. So, and Ray Dalio very much talks about this as well as an example, but the premise here of what I'm trying to get at is do not take the risk. Cross margin, which is something that a lot of leverage traders use, which is you're accessing the entire portfolio of whatever different things that you have to open positions, versus isolated margin, which may be trading against Bitcoin, but only accessing the Bitcoin for your margin. Cross margin means the entire stack is available, which does give you access to more leverage. But again, same thing, you never want to be trading more than 1 to 2%, because the slippage of recovering back to where you were just gets wider and wider. So I'm going to stop it here because I will do some other videos talking about the crash. Yes, thank you for listening. I hope you enjoyed, and I'll see you in the next one. Goodbye.